For taking profits, we all are taking either long or short positions based on forecasting future price movements. People who are used to trading, when they are reading charts, they would already know that sometimes there are some similar patterns of price movements compared with before. Today I'm going to introduce an AI indicator that analyzes the historical price movement pattern of the chart and compares it with current movement forecasting the future price movement, and how to use the price forecasting AI for trading. Getting into the chart in Trading View, click the Indicator section for adding up the indicator name of the Echo forecast. Firstly, it is important to know how this indicator works before using it. When the Echo forecast is opened, you can see there are 3 different colored sections. The gray zone is the overall evaluation section, the orange zone means recent candle movement, and lastly, the green zone shows a similar pattern based on the orange zone. If we are clear about how the forecasting mechanism worked, let's move on to the setting. If you take a look at the Input section, there is an Evaluation window, Forecast window, Forecast mode, and Forecast construction. The Evaluation window is about finding the range of historical data, and the Forecast window is about the range of the future price movement forecast. The Forecast mode is about deciding whether to use similarity or dissimilarity on recent patterns. Lastly, Forecast construction is possible to choose cumulative, mean, or linreg. On Forecast style, you can choose the color of the future price movement traceline. You can choose any color you want that is clear to see. I chose the yellow color. Now, I am going to explain how to use this indicator in trading. The simplest way is based on the forecast traceline of the future price movement, getting into the long or short trades. If it is a long position trade, put the stop loss on the previous low, and take profit is supposed to be a risk-reward ratio of 1.5. Quite interestingly, it shows the good accuracy of the forecast. On the other hand, if it is a short position trade, put the stop loss on the previous high. Same as the long position trades, set the take profit on a 1.5 risk-reward ratio. As it is expected again, the candle moved based on the pattern that it forecasted. For a higher winning rate and filtering the wrong signals, it is better to add up 2 more indicators to optimization. Click on the Indicator button, add up SSL Hybrid, then get into the setting on the Input section. Change the SSL1 baseline type from HMA to McGinley to diagnose the current trend easier, and change the length from 60 to 200. After that, click the style and remove all the checks except MA baseline and bar color. SSL will be showing the current trend. If the candles are blue, it is on the bullish trend, so get into the long positions only. If it is showing the red candles, then get into the short positions only because it is in the bearish trend. The last indicator that got to be added to the chart is the volume oscillator. Same as before, click the Indicator section to add up the volume oscillator. Getting into the style in the setting, changing the plot, and 0 line color. I changed it to yellow and white. If the volume oscillator indicator is above the 0 line, it means that there is enough volume in the market currently, which means that it is good to get into the trade. Conversely, if it is below the 0 line, it means that currently, there is not enough volume in the market, which has a bigger possibility of manipulation. To clear the trading strategy for long trades, first of all, the SSL Hybrid has to show blue-colored candles. Secondly, the candle has to touch the top of the orange line while it is forecasting the bullish movement. As last, the volume oscillator has to be located above the 0 line. When all the conditions are satisfied, get into the trade when the bar is closed. If it is a strong bullish engulfing candle, the stop loss can be set on the low of the bullish engulfing candle, or SSL baseline. Otherwise, it can be the previous low. Take profit is fine to be 2 of risk-reward ratio. On the other hand, for the short position trading, the SSL Hybrid has to be red candles, and the candle touches the lower line of the orange zone. And the volume oscillator has to be located below the 0 line, the stop loss previous high of a bearish engulfing candle, or SSL baseline. Take profit is fine to be 2 of risk-reward ratio 2. Today we learned how to trade using the forecast price indicator with 2 more indicators for adding a higher chance of winning and filtering the fake signal. It seems quite fine trade compared with the other trading systems on the aspect of risk-reward ratio. Backtest enough before using the trading system to not make mistakes. See you next time.